What's up, my people? It's your boy Nick, HOUTX Trader on the gram and the YouTube. And yeah, coming from you live and direct from Houston, Texas. Hey, check it out, guys. Just a reminder, this is only for training. This is not financial advice. If you need financial advice, please go see a financial planner. And please do me a favor and like and subscribe to help the algorithms, help me grow this channel. I do not charge signals. I do not charge subscriptions of any sort. I don't sell classes. I do none of that. All the stuff that I know, all the knowledge that I'm putting out there is absolutely free to you guys. Only thing I ask is you smash that subscribe button. And then once I have enough subscribers and enough hours on YouTube, they can pay me. I don't need you guys' money. Okay. So, having said that, let's look at the charts, guys. Let's get in. We're going to do NASDAQ, gold, 30, and a couple of the pairs, and we'll peek at the cryptos. So, let me figure out how to do the screen share. Aha. There it is. Let's start off with the big boys, guys. Okay, check this out, guys. We are in this buy from down here. Now, I'm pretty sure on the earlier video, I said this. So earlier in the week, we took this buy, guys. So this is simple strategy stuff. This is my strategy over and over again. We fib from the bottom to the top. Okay, if you'll see this fib right here. From the bottom, we drag it to the top, and then we mark off our buy zone, okay, which is between the 78.6 and the 88.6. When it gets in the zone, we start looking for entries, and there it is. We have further confluences with these candles came in here. This is where I took my entry. Also, look at the RSI. It's oversold, guys. So when we have an oversold or an overbought RSI, in this situation, oversold, we have the candles coming down into our Fibonacci zone. We can feel confident that we need to take this trade. We have a small stop loss. Our stop loss is always 10% of the Fibonacci. So we don't have a huge stop loss. And our TP, I'd like to say our TP1, but really the TP2 in this situation was the top. And guess what, guys? It hit. So there is right there a 3-to-1 trade. Now, I did not take this. I called TP1 here subsequently because when this retraced, let me just delete this now so you guys know we all hit TP2. So what happened? Now let's look at market flow. Comes down, we buy, okay? It comes up. Now, at this situation, when it comes up, I have, as you can see, the marks, that's liquidity, guys. Okay, let's mark this off. And the reason why that's liquidity is because we now have this top, which lines up with the top of these candles, okay? When this started rejecting down, I was like, confidence is kind of maybe this was going to turn around and keep melting off. So I took TP in this area here, all right? This came back down to our entry. And when we're on the calls, I told the guys, look, we could fib this move now. And there is our other sell entry spot right there at the top of the 78.6. All right, so now our buy zone just shifted to here, came back in, hit the top of our buy zone, and then go. I did not take a second entry, but I told the guys you could take a second entry there if you want to, because now look, now we know that the bulls have stepped in and rejected this double bottom. Okay, it's retraced, and look at where your stop loss would be now. If you're entering the 78.6, your stop loss is there, and your TP then can be there. That's a 2.5-to-1 trade, but really the TP is still this double top because it hasn't set the double top. So there's your 4-to-1 trade. So there was an opportunity for two different entries on this. I just held it to one entry because I was also in 30, so I didn't want to go too crazy, right? But both of those trades, or at least the one that I took, which was the first one, hit TP. I did not enter the second one, even though if you look at my MetaTrader, it looks like I took this one because the entry was right there perfectly on the 78.6, which was the bottom of those two candles, which is where I entered. Okay. So that is how we found that trade. Now, what do we do now? Okay. This liquidity here has been taken out, so we can delete this liquidity. And if you want, you could even just do like a little, if you need a reminder or something. All right. Been taken out. Been taken out. Now, let's look at this fib. This first fib on the push up needs to hit TP. There it is. It hit TP. It came a little bit short of the 61.8, but it's really just a double top, okay? This is now the second leg, Okay. This is now the second leg of the Elliott wave. So if we really would like to see this original move hit TP, which is this extension or that extension, one of the two, we can go for this one. This second leg now, let's modify this fib. This second leg, this leg is now lining up with the TP of the major move. So this is giving me confidence that this is going to continue to push to break this to set an all-time high. So now what? We have a little dip down and below, but really what I'd like to see again is a dip into this section or a dip into at least this little section here at the 61.8. So if you're going to try to re-enter this trade again, you could probably enter here. I would say right where those kissing candles are. And what I mean by kissing candles is this. See this little area right here where the candles touch right there? Okay. There's one there, but also look, this candle here does not have a bottom on it. So these are the two little areas where we could look to take entries. But I want to focus on this bottom one first. So let's come down to the 5 minute. And the reason why I call that a kissing candle is because look, there are cells sitting in that little candle. So when we come down to the smaller time frames, then we can modify this little box of ours. And there it is. Okay. So there's a little area, those little cells I would like to see get hit if it's going to start to buy back up. So if you're going to get into another entry and you're going to roll the dice on this one more time, um, that would be the entry there. There or there, I prefer this one. That's right at the 88.6, if you can see that. So if you're entering, let's say right above the 88.6 or even at the top of this area, again, your stop loss is there, and your TP now is really up here because you want to see this double top get taken out. Okay, which is the extension. But look at this now. Anytime we have double tops, double bottoms, triple tops, triple bottoms, whatever, that is a liquidity area. The market is going to target that and take that out. Okay, that is going to happen. Let's just delete this. So now that it's setting a double top, and if this retraces down to here, we know this is now a target. Unfortunately, we also have this double bottom here. So we start playing this game of which one is it going to take out first. We're in a strong bull market. So I would think it'd want to come down either here to here, then take out this top, set the all-time high, and then come down. Okay. And again, I'm not saying it's going to come all the way down. We'll have to figure it out. But eventually, one of these days, obviously, this is going to get taken out. Okay, that double bottom is. And I wanted to show this too, guys, on the NASDAQ. If we look, what is this right here? It's the same thing. There's the double bottom. Okay, so what are we doing? We're playing the fib, the big fib from the bottom to the top, right? So if you erased, let's just say you erased all of this and none of that exists, right? The fib is from there. Okay, look, 78.6 is our entry. So it's literally almost the exact same pattern. Okay, there's liquidity on bottom. Here's now liquidity on top. Okay, what does the market do? The market pushes off, sets liquidity on bottom with these lows and these lows, comes up, now sets liquidity on top, smokes these, takes these two bottom liquidity outs, finds our fib zone, which is right at the top of this order block. You know, you're right into this order block area. Find the fib zone and trend line. As you can see, there's a trend line. And then what? Targets this top and takes it out, which it did right there. Okay. That's the same thing it's doing right now. Pushes off, comes down, sets liquidity, takes out the top, coming back down. So is it going to come a little higher and then shoot down? That's what I'm expecting. I'm expecting this to come up here and to hit TP. And if it does the exact same thing it did before, it'll come down, smoke this liquidity, and get into our buy zone and then push back off. Okay. So we need to be aware of that. Okay. I'm going to leave that bottom one there. I'm going to delete these two TPs. We've already had that taken out. So now I want to show one other thing. Let me go to the 4-hour on NASDAQ. Let's think about this. If we went from the bottom here, right? We went from the bottom to the top. let's just see if I can move it from the bottom of this. You see how it's not much difference? I mean, the amount of pips from there to there isn't a hell of a lot different than the amount of pips from there to there. So this move isn't terribly off. That's the same size. That's almost the same size. I mean, yeah, it's a little bit higher, right? But you know that it's at least in the ballpark. So to think that this thing couldn't come down and retrace is crazy because it absolutely could. So if we look at this retracement, right, from there to there, from the top of here, how much did it retrace? Well, if this is in the buy zone, there it is. So we're not looking for a much greater retracement. It's a little bit bigger, but it's not crazy. That's the only point I was going to try to show you. It's within the realm of possibility. It's not like we're looking for a crazy amount of pips, right? So I think you guys get the idea on that one. So there it is. That's the plan for now. If you're not in any trades for now, wait for this double top to break. Come up here into these fib extension zones somewhere up in this area. Let's see if we can find a sell. I'm not saying you couldn't have taken the sell off the double top because it is overbought. There is some confluences there. But if you're, if you're going to take the sell, you now have this bottom. You can now fib that, and then now you can sell. I just think that you're a little bit risky because A, look at this momentum. B, the market is clearly bullish. And so I think you're playing with fire. This is one of those situations where it's almost better just to wait. But if you're one of those people who cannot wait and have to be in every single trade, fib that top to bottom, wait for your entry to come back up in the 78, 88.6, have a small stop loss, and target these pips in the double bottom. Okay. That's a hell of a trade. Maybe that's worth taking. But wait till you have better conditions on this divergence. It's clearly divergence, but only because we're in Asian session. So you'd have to wait for that in the morning and see. And news, guys, there's a bunch of news tomorrow. All right. So be patient on that one. I'm honestly, I'm not taking it. I'm not suggesting it. I'm just saying it's kind of crazy. Same deal, guys, with US 30. What do we have? We had a push up, right? Push up, push down, push up. It's now setting liquidity right here. Push down. Okay. Why did it push down? Well, it wanted to take out there's a trend line that's sitting right here. Okay. It wanted to take out that trend line because that's liquidity below that trend line. And there's also liquidity below this candle in this area. Okay, there's the bottom of that candle, long wick. Look over here. There's a sell candle sitting right there at the 61.8. Right. So what did it do? It came down, took this out, find our buy zone, 78, 88.6 over and over again, guys. There it is, pushed off. Now, here's the deal. I don't necessarily think that this is the bottom because it did not just go. Usually when it finds liquidity, it comes down and then it V's, comes down and then gone, right? What the hell? My Tucker, my Twitter's randomly talking. That's crazy. Anyways, so I think this is an Elliott wave, maybe even a flag situation. Okay. What I mean by that is push down, one push up, two push up, three push up, maybe right after this T, maybe right there or somewhere in this area, and then sell off. So I am a little more cautious on the US 30 just because it hasn't left yet. So again, we found that off this bigger fib. And I said this, if this pushes off and leaves, like here, you could fib that like this and find your entry where? There's the next fib. Now that we're knowing the buyers have showed up, fibs down. There's your buy zone, 70, 88.6. You could have taken that other entry right there. Your stop loss would have been right there, and you would be in profit. All right. Here's your 3-to-1 all day long. So where's the next entry? If you're not in any of these entries, what can you do? Let's delete this. Let's delete this. There is a possibility for one more retest because this is an Elliott wave, right? So first push, second push. We can try to find a third push in this area. So you can get on your RSIs and get on your fibs. Maybe you can technically the Fibonacci now is from here to here, right? So maybe you could use this buy zone in this area. All right. And maybe try to find one more buy opportunity. But knowing that after that, this, you can leave a runner, but after that, it's probably going to get smashed because what you're basically doing is setting up a trend line here on the bottom side that's going to get taken out. So, it is what it is. And we'll look for selling opportunities once this top liquidity has been taken out. I don't know if it's going to get that high. This is obviously an order block there, but this is also the top of this other area. So what it could be doing, if we delete all this and clean this up, is we now fib this from there to there, and it could very well could just find this area right here as resistance, and we sell from there because that would be our sell area and our sell fib, right? And we'll look what happens because this area, here is liquidity, and so are the wicks right on the other side of it, right? Because that's liquidity and this is liquidity. So I wouldn't mind it because I would take the sell. I'd really like it because I'm advised to take out this top liquidity. But I am realizing that it could just clear this stuff out, come right inside here, and then tank off and blow through all this. In which case it's going to come down to here, which is our extensions on those TPs. And if we do the big fib, it's the big fib from here to there. Okay. So from there to there. So for now, I'm in these buys. There's the fib zone, as you can see. I'm in the buys. I'm going to hold this TP until it hits this TP1 and let this thing run. But I do realize I'm protected, by the way. I do realize that it could turn around right here at this 88.6. Right. So if you're not in, you could try to maybe catch a buy there or wait for this and try to catch that sell up there where I sold it, where I just showed it. If you didn't catch that, rewind it. Gold, don't even fuck with gold. It's gone. Wait for a break of structure and then come back. Don't even mess with it. Let's see. I think we're in EJ. So we called out an EJ trade up here and it smashed and it also broke trend line, which I'm happy about. It come back up and retested this trend line. And so if we come back out to, let's say, the daily, which is what I'm trading this on the daily, my TP is down here. So I want to see all this liquidity get taken out. And then it also has this wick here, right? Has that wick, has that. I'd like to see all this stuff get taken out and then find support right around this top of this order block over here. So, and that's also the extension on that fib. So I'm in sells and there's my TP. Let's see what else we're in. So we were in a GU and it lost. We lost the GU trade right there. Let's go to the smaller time frame. And it peaked up right above our stop loss. So I was hoping it would find that order block right there as resistance, but it's not, because if we come back out, let's say the 12-hour or the 8-hour, this is obviously a liquidity area. It's purple. I should make it green. So that is clear as day liquidity. Look at all these tops. So it's going to break through all these tops. Once it does break through, we can look for another sell up here in our sell area. But for now, I had to take that risk, and I did, and I lost. It happens. So let's just delete all this jumbo in here. Delete all, and so look here too, guys. There's liquidity on the bottom side. So when we do catch this sell up here, wherever we catch it, we know that the target is at least here for our TP. All right, so we'll just wait, and we'll try to catch that. What else? UCAD. I think UCAD. Yeah, UCAD broke too. And if I'm not mistaken, I think I got in on a second entry on UCAD off of this trend line break. Yeah, I think pretty sure I entered twice. So I have an entry there at the top where I called, and I have an entry there. Alrighty. So that is the EJ, that is the UCAD, and I think that, yeah, and we lost the UJ. So I think that's the only ones we're in. If you guys have a certain pair you guys want me to look at and mark up, please holler at me, and we can take a look at those. I had someone ask me the other day for EA. So I'm really waiting for EA to come down just a little bit further. And someone said something about AU. Again, let's see. Yeah, it's kind of tough to sell up here because of all this liquidity. So I don't really know. I don't trade these pairs. So maybe one of these days I'll dive deeper into it. Who knows? Let's just look at crypto real quick. Bitcoin still pumping and hasn't turned around yet. So we're sitting on our hands for that one. Same thing. Look at Ethereum. Go to the moon. We're all good. Solana, which I'm loving, is pumping up 145, dude. How about that? I love that. I'm all about that Solana pumping up there. And look, it's cleared out this high. See the red line? I have this. It's cleared it. It's broke it. So, hopefully the next one is then, this one. That's the next stopping point. It's up there. So let's see, $200. I'd be stoked. Uh, and then again, Cardano is looking good. It had that dip. Look at that liquidity. Grab and go. So that thing's going to keep pushing. I think the dot did the same thing. Yeah, pretty much all the cryptos had that quick down and go. So I'm pumped on dot. Again, if you guys take a look at like the big picture of these cryptos, the dot and the Cardano, look at the baseline and look at where you're at as far as the potential. If it sets all-time highs, I mean, you're at $10, 5 times your money. All right. And Cardano, it's at 60 something, 75 cents. If it goes to $3, $75, that's 4 times your money. Right. And Solana's already taken off. Solana's a bit bigger than those because of all the NFTs, but I mean, it's 145. The all-time was 258. So again, there's more than double your money there as well. So we are good. 145 would be 300, then would be double. So it's a little bit less than double your money there. Okay, guys, that is the markup. Please remember that, let's say stop share. So please, guys, remember this is just for training. It's not financial advice. Please like, please subscribe. If I said anything in the video that you like, please give me a subscribe. Please give me a like. If you have any questions, please hit me up. Let me know right in the chat if you have some questions. Again, I'm not selling anything. I'm not promoting anything. I'm just starting a YouTube channel where I do markups, I do live trading, and I'm here just to answer questions and to help people out in the trading world. So please do me a favor and subscribe. Love you guys. Have a good night. I'll see you tomorrow morning for the live trading. Bye.